Hey there, money-hungry maniacs. It's your favorite financial guru, Jim Cramer, here to talk about the next big thing in crypto Arbitrum Coin, or ARB for short. You think Bitcoin's old news? Think Dogecoin is for the dogs? Well, strap in, because ARB is shaking things up in the Wild West of cryptocurrency. Arbitrum is what the cool kids call a Layer 2 solution. Think of it like this: Ethereum is that busy highway always jammed with traffic. Arbitrum is a shiny new express lane built right on top, making transactions faster and cheaper. Less fees, more speed, that's what I'm talking about. But hold your horses. Before you go throwing your life savings into ARB, remember this is still crypto. It's volatile, it's risky, and it's not for the faint of heart. But hey, fortune favors the bold, right? So if you're ready to dive into the exciting world of Arbitrum, stick with me. We're gonna break down everything you need to know about this potential game changer. Section 2, why Arbitrum? Why not Bitcoin? Scaling the heights of blockchain. Now you might be asking, Jim, why Arbitrum and not just good old Bitcoin? Listen up. Bitcoin was the first, sure, but it's like that old clunky car in your grandpa's garage. Reliable maybe, but slow and expensive to run. Ethereum, with its smart contracts, was like a sleek sports car. Faster, more versatile, but still prone to traffic jams. That's where Arbitrum comes in. It's like adding a turbocharger to that sports car. See, Arbitrum tackles Ethereum's biggest problem: scalability. It does this by processing transactions off the main Ethereum blockchain. This means faster speeds, lower costs, and happier users. Think of it like this. You want to buy a cup of coffee with crypto. With Bitcoin, you're waiting in line for an hour and paying a $10 transaction fee. With Arbitrum, you're in and out in seconds with a fee of pennies. Which one sounds better to you? Section 3, fasten your seatbelts. The wild ride of crypto investment. We ain't sugarcoating it, folks. Crypto investing is a roller coaster. It's not for those who scare easily. But like that heart-stopping drop on your favorite ride, the potential rewards can be exhilarating. Before you even think about buying ARB, you need to understand the risks. This isn't your grandma's stock market, folks. Crypto can be volatile. Prices swing up and down like a pendulum on steroids. That's why it's crucial to do your homework. Don't just jump on the hype train because your neighbor's nephew is making a killing. Research, learn, understand. Look beyond the hype and into the technology, the team, and the potential. Remember, knowledge is power. And in the world of crypto, it could be the difference between striking gold and losing your shirt. So buckle up, hold on tight, and get ready for the wild ride of Arbitrum investment. Section 1, gearing up, choosing your crypto wallet. Alright, thrill seekers, ready to get your hands dirty with some ARB? First things first, you need a place to store your digital gold. Think of it like your personal Fort Knox. But instead of bricks and mortar, it's lines of code and encryption. There are two main types of wallets: hot wallets and cold wallets. Hot wallets are like your everyday wallet, connected to the internet for easy access. Think apps like Coinbase Wallet or MetaMask. Cold wallets are like your safe at home, offline and super secure for those big hauls of crypto. Hardware wallets like Ledger and Trezor are your best bet. Now, which one's right for you? If you're just starting out and trading smaller amounts, a hot wallet is a user-friendly option. But if you're serious about security and holding on to your ARB for the long haul, invest in a cold wallet. Trust me, peace of mind is priceless. Remember, your wallet holds the keys to your crypto kingdom. Choose wisely, protect your passwords like they're sacred texts, and enable two-factor authentication for an extra layer of security. Don't be that person who loses their fortune because they forgot their password. Ready, set, trade. Navigating the world of crypto exchanges. Now that you've got your secure digital wallet, it's time to enter the arena of crypto exchanges. Think of them as the bustling marketplaces of the digital world, where you can buy, sell, and trade your ARB. Don't be overwhelmed by the flashing charts and endless ticker symbols. Start with reputable exchanges like Binance, Coinbase, or Kraken. They're like the big box stores of the crypto world, reliable, user-friendly, and usually have the best prices. Before you jump into the trading frenzy, take your time to explore the platform. Look at the fees, security measures, and the variety of cryptocurrencies available. Remember, not all exchanges are created equal. Some cater to beginners while others are for seasoned veterans. Once you've found your trading haven, it's time to create an account. This usually involves verifying your identity, much like opening a bank account. Don't worry, it's all part of keeping the crypto world safe from those pesky scammers. Funding your adventure. Depositing funds and buying your first ARB. Alright, you've got your wallet, you've braved the exchanges, now it's time to load up on some ARB. Most exchanges make it easy to deposit funds. You can usually link your bank account, debit card, or even use other cryptocurrencies. Each exchange has its own process, but it's usually as straightforward as clicking deposit, selecting your preferred method, and following the on-screen instructions. Just remember, transaction fees can vary, so it pays to shop around. Now the moment you've all been waiting for. Buying your first ARB, head over to the ARB trading pair, typically ARB USD or ARB BTC. You'll see a buy and sell order book, charts showing price movements, and a place to enter your desired amount. Don't get caught up in the FOMO, fear of missing out. Set a budget, stick to it, and consider using limit orders. These allow you to set your desired purchase price, ensuring you don't overpay in the heat of the moment. Congratulations, you're now officially an ARB investor. Don't put all your eggs in one basket, diversification is key. So, you're ready to throw down some serious cash on ARB, huh? Hold your horses, cowboy. Even I, Jim Cramer, don't put all my eggs in one basket. That's a recipe for disaster, especially in the wild world of crypto. Diversification is the name of the game, folks. Think of it like a balanced breakfast for your portfolio. You wouldn't just eat bacon, would you? Okay, maybe you would, but you get the point. Spread your risk by investing in a mix of cryptocurrencies. Bitcoin, Ethereum, maybe even a sprinkle of those meme coins for fun. Just remember, the more diverse your portfolio, the less impact one bad apple can have. Now, I'm not saying spread yourself thin like cheap butter. Focus on projects you believe in, technologies that excite you, teams that inspire confidence. Do your research, pick your winners, and diversify, diversify, diversify. Section 2. Timing the market. Patience is a virtue. Listen up, you impatient traders. In the world of crypto, timing is everything. Don't just jump in head first because you saw some guy on Twitter bragging about his gains. That's a surefire way to get burned. Remember, Rome wasn't built in a day, and neither are fortunes. Unless you're talking about those lucky lottery winners, but that's a story for another time. Crypto markets move in cycles, my friends. Bull markets, bear markets, and everything in between. Patience is your secret weapon. Don't chase pumps, don't panic sell during dips. Instead, develop a long-term strategy. Set realistic goals, invest what you can afford to lose, and let time work its magic. Remember, the tortoise always beats the hare. Slow and steady wins the race. So take a deep breath, ignore the FOMO, and trust in your investment strategy. Good things come to those who wait, especially in the crypto market. Section 3. Riding the waves. Understanding market sentiment and trends. Alright, listen up because this is important. The crypto market isn't some random lottery. It's driven by sentiment, by trends, by the collective hopes and fears of millions of investors. Understanding these forces is crucial to your success. Think of it like surfing. You wouldn't just paddle out without reading the waves, would you? You'd watch the patterns, feel the currents, and time your entry perfectly to ride that wave to shore. Crypto is the same. Keep your finger on the pulse of the market. Follow the news, join online communities, learn to read charts and technical indicators. The more you understand the forces at play, the better equipped you'll be to make informed decisions. Remember, knowledge is power. And in the fast-paced world of crypto, it's the difference between catching the next big wave and getting wiped out by the tide. So stay informed, stay vigilant, and learn to ride those market waves like a pro. Section 1. Charting the course technical analysis for ARB. Alright, you chart-loving fanatics, this one's for you. Technical analysis. The art of deciphering those squiggly lines on price charts is like having a secret weapon in the crypto casino. Think of it like this. Charts are the footprints of the market. They tell a story of where the price has been, where it is now, and most importantly, where it might be headed. Now, I'm not talking about some crystal ball here, but with the right tools, you can gain a serious edge. First up, candlestick charts. These babies are your bread and butter. Each candle tells you the open, close, high, and low price for a given period. Learn to read the patterns, the hammers, the dojis, the engulfing patterns, and you'll start to see the market's intentions. Next, we've got moving averages. These smooth out the price action, giving you a clearer picture of the trend. Are the short-term averages crossing above the long-term ones? Bullish. Crossing below? Bearish. Simple, right? Section 2. Reading the tea leaves. Key indicators for buying and selling. Now let's talk indicators, those fancy calculations that add another layer of insight to your charts. These are like your market whisperers, giving you clues about momentum, volatility, and potential reversals. First on our list is the RSI, or Relative Strength Index. Think of it as a measure of the market's stamina. Is it overbought and ready for a breather, or is it oversold and ripe for a bounce? The RSI can give you a heads up. Next we have the MACD, or Moving Average Convergence Divergence. Sounds complicated, but it's really just a fancy way of spotting changes in momentum. Is the MACD crossing above its signal line? Bullish signal. Crossing below? Bearish alert. Don't forget about trading volume. It's like the fuel that drives the market. High volume confirms breakouts and trends, while low volume can signal a reversal is brewing. Keep an eye on it, folks. Remember, these are just a few of the many tools at your disposal. Experiment with different indicators, find what works for you, and never stop learning. The more you understand the language of the charts, the better trader you'll become. Section 3. Don't be a hero, setting realistic targets and stop losses. Alright, you've mastered the charts, you're feeling confident, you're ready to make it rain ARB. But hold your horses, cowboy. Even the best traders know when to walk away from the table. That's where target prices and stop-loss orders come in. Think of your target price as your victory dance point. You've analyzed the charts, you've identified a potential profit zone, and now it's time to lock in those gains. Set a realistic target based on your analysis, and once you hit it, take your profits and run. Now, for the not-so-fun part, stop-loss orders. These are your safety net, your insurance policy against those unexpected market crashes. Set a stop-loss order below your entry point to limit your potential losses. Trust me, it's better to live to trade another day. Remember, greed is a dangerous beast, and fear can paralyze even the most seasoned trader. Don't let your emotions cloud your judgment. Set those targets, set those stop losses, and stick to your plan. Discipline is key in the wild world of crypto trading. Section 1. Gazing into the crystal ball. What's in store for ARB in 2025? Alright, you crystal ball gazers and future predictors, gather round. Everyone wants to know, what's the deal with ARB in 2025? Will it be sipping margaritas on a beach made of money or drowning in a sea of forgotten altcoins? Listen, even with my years of experience on Wall Street, predicting the crypto market is like predicting which way a cat will jump. It's anyone's guess. But hey, that doesn't mean we can't have some fun speculating, right? First off, let's talk about adoption. If Arbitrum keeps solving Ethereum's problems and attracting new users, we could be talking about a whole new ballgame. More users mean more demand for ARB, which could send the price soaring higher than a rocket on the 4th of July. But hold on, the crypto world is a fickle beast. New competitors could emerge, regulations could tighten, or Elon Musk could tweet something that sends the entire market into a tailspin. Remember folks, always expect the unexpected. Now let's talk about Ethereum. Remember that sleek sports car we talked about earlier? Well, Ethereum's getting a major upgrade, and guess what? That's good news for Arbitrum. See, as Ethereum becomes faster and more scalable, it paves the way for even more growth on Layer 2 solutions like Arbitrum. Think of it like this. A rising tide lifts all boats, and Ethereum's success could translate into major wins for ARB. Imagine a world where decentralized applications, or dApps, are as common as smartphones, where NFTs are traded like baseball cards, and where blockchain technology powers everything from supply chains to voting systems. In this future, Arbitrum could be a major player, and early investors could be laughing all the way to the bank. But remember folks, this is all speculation. The crypto market is still in its infancy, and while the potential is enormous, so are the risks. So do your research, stay informed, and never invest more than you can afford to lose. Alright, thrill seekers, here's the bottom line. 2025 is shaping up to be a wild ride for the crypto market. We could see parabolic gains, heart-stopping crashes, and everything in between. So buckle up, Buttercup, because it's going to be a bumpy ride. Remember those market cycles I mentioned earlier? Well, 2025 could be a pivotal year. Some analysts predict a massive bull run, fueled by institutional adoption and mainstream acceptance. Others warn of a potential bubble burst, leading to a crypto winter that would make even the bravest trader shiver. So, what's a savvy investor to do? First, don't panic. Volatility is part of the game. Second, stay informed. Keep your finger on the pulse of the market and be prepared to adjust your strategy as needed. And most importantly, remember why you invested in the first place. Do you believe in the potential of Arbitrum and the future of decentralized finance? Then hold on tight, weather the storms, and enjoy the ride. Because in the world of crypto, anything is possible. So there you have it, folks. We've journeyed through the exciting, unpredictable world of Arbitrum, from its inner workings to its potential impact on the future of finance. Remember that clunky Bitcoin analogy? Well, Arbitrum is aiming to be the sleek, high-speed train of the decentralized future. Imagine a world where you don't need banks to send money, where you control your own financial destiny, where transactions are fast, cheap, and accessible to anyone with an internet connection. That's the promise of decentralized finance, and Arbitrum is leading the charge. Now, I'm not saying it's all smooth sailing from here. Challenges remain: scalability, regulation, and of course the ever-present volatility of the crypto market. But hey, that's what makes this space so damn exciting. Now, before you go remortgaging your house to buy a mountain of ARB, let's take a breath and talk strategy. Remember, this is still the Wild West of finance. Fortunes are made and lost overnight, and even the smartest investors get caught with their pants down sometimes. So what's the play, Jim? Simple. Don't be a hero, start small, diversify your portfolio, and only invest what you can afford to lose. Treat your crypto investments like a side hustle, not your primary source of income. Remember, knowledge is power. Keep learning, stay informed, and don't be afraid to adjust your strategy as the market evolves. And most importantly, don't let greed cloud your judgment. Slow and steady wins the race, my friends. The world of crypto is constantly evolving. What's hot today might be old news tomorrow, and the next big thing could be lurking just around the corner. That's why it's crucial to stay hungry, stay curious, and never stop learning. Don't be afraid to experiment, to try new things, to challenge the status quo. Read everything you can get your hands on, join online communities, and talk to other crypto enthusiasts. The more you learn, the better equipped you'll be to navigate the exciting, unpredictable world of crypto. Remember, investing in crypto is more than just chasing profits. It's about being part of a movement, a revolution in finance that has the potential to change the world as we know it. So buckle up, embrace the unknown, and let's see where this wild ride takes us.